Guys, the market is down, but it's really not that bad. It is currently very early UK time, but I just wanted to jump on and make a quick update video on what just happened, why I think it happened, and how I plan on making the most of this opportunity, because I do really believe this is an opportunity and how we can make the most of opportunities like this in the future. But first, I want to start this by saying nothing I say should be considered financial advice. This is just my opinion shared for entertainment purposes only. With that, let's jump into the charts and have a look at what just happened. So BTC currently sitting at $69,400, up from a low today of around $68,300. So we've already bounced about $1,000 from the bottom, but the daily high was all the way up at 72K. So what just happened? Well, we knew that 72K was going to be a really, really tough level of resistance to beat because there was a huge ask wall up there. But part of the reason why this move was so dramatic was the liquidations, of course. So if we take a look over here at our CoinGlass liquidation map, you can see really most of the long leverage that was in the market, or at least a great majority of it, has now gone. So even if we look all the way down here at 62,300, that represents now less than $1 billion worth of long positions that would be liquidated to the downside. Conversely, if we look up at our magic 72K level, you can see that that number is now closer to $2 billion worth of short positions that would be liquidated if we were to move to the upside. If we look over here at the liquidations heat map, you can see within the last 12 hours, Bitcoin positions around $57.6 million worth liquidated, around $50.6 million worth of ETH positions liquidated, around $20 million worth of SOL positions liquidated. It's a total of $327.9 million of longs liquidated within the last 12 hours across the market. So why did this happen? Well, apart from selling pressure at 72K, one of the things that might have precipitated this move was this little piece of news: JP Morgan and Citi scrapping the Fed rate cut bets for July after jobs data, which came out yesterday, 7th of June. As we know, rate cuts tend to be bullish for risk on assets like stocks and Bitcoin, and delays to rate cuts tend to be not so bullish for assets like that. A piece of news like this coming out could definitely have some effect on the market. I think it's really important at times like this to look at what the institutions are doing. So if we look over here at our spot Bitcoin ETF flows, you can see today was in fact another net inflow day for the spot Bitcoin ETFs. Par for the course, most of those inflows were to the BlackRock IBIT fund, around $350 million worth. Now, as we know, institutional whales love buying Bitcoin at lower prices, and what that often means is that they are buying from retail traders who bought the top and had to sell low because they had low conviction in their trades, or because they were trading with money that they didn't have via leverage positions, in which case they were forced to sell out of their positions because they became liquidated. That's more than possible given how much leverage that there was in the market over the last couple of weeks, and given how many whales are buying in right now, that there was some price manipulation going on, and that could definitely have started the cascade to the downside. That being said, the overall sentiment in the market is still big, right? These institutions are still buying. They don't care about a 2% down day. But all of the overall positive news is still there. Just to give you a quick reminder, some of the top stories this week. Today was in fact the 18th straight day of net inflows into those ETFs, right? The longest run of inflows since the ETFs were approved. Binance resumed taking MasterCard payments for crypto, again allowing more access for retail into the space. Bybit started allowing registration for Chinese users again, allowing more retail into the space. And Robinhood, one of the largest stock trading apps in the US, acquired Bitstamp for $200 million. Bitstamp being one of the longest standing crypto exchanges and the first crypto exchange in the UK to receive FCA regulation, again allowing more retail into the space at such a time as they choose to join the party en masse. Now, even from a technical perspective, today really wasn't that big of a down day. If you look into the chart, you can see we are nowhere off our resistance turn support level at 67,000, and we barely even came into support, local support here. As I said, this represents less than a 2% move over the last 24 hours. Obviously, that is accounting for the bounce. I think where things get much more interesting is in some of the altcoins and lower caps, which came down much further. So just to name two, right? ETH down 3.07%, slightly more interesting. And then Solana down nearly 4% in the last 24 hours, which is a lot more interesting. So today I did in fact acquire some ETH as part of my broader dollar cost averaging strategy. I had bids down at 36,000, essentially placing those just a little bit higher than the tail of the wick for our first down day after that ETF approval update. Also had bids in further down the book that weren't hit. And on Solana, I had a number of different bids all the way down to 154, which I was very, very pleased by because that is almost catching the end of the wick on Solana, on the Coinbase chart at least. So lucky fill there, but had bids above that and had bids below that as well. The rationale for that was resistance turned support, basically focused around that 158 level, allowing some room for an overextension of that move beneath. And if the market didn't come down as far as that, it also had some bids a little bit higher as well. Also got involved in a number of different lower caps, which I'll probably go into in more detail in a later video. But the point of this all is days like today really highlight the importance of being patient in the market, not chasing trades and letting price come to you instead. To quote an old trading cliche, it pays to be brave when others are fearful and fearful when others are brave. Essentially what that means is not bidding the top of the market in a state of euphoria, in an emotional state like all the other retail sheep do who lose money day in, day out, but rather setting your bids ahead of time at a part of the market where you would actually like to be filled, where there is fair value. But as ever, that is not my advice, that is just my opinion. Thank you so much for listening, guys. Catch you in the next one. Plenty more to come. Cheers. Bye-bye.